DBS Bank's DEX exchange experienced a surge in Bitcoin and Ether trading in 2022. The number of Bitcoin traded increased by 80% and Ether by 65%. Despite Bitcoin's 65% drop in value, DEX also doubled its customer base, with plans to expand into retail trading in Hong Kong. Recently, DEX added Polkadot and Cardano to its platform, bringing its total tokens traded to 6. Based on the investment criteria stated in the article, I would rate this article a 6 out of 10. The article mentions that the number of Bitcoin and Ether traded on DEX was up significantly year over year, but it does not provide any information about the performance of those tokens. Additionally, while the article mentions DEX's plans to expand into retail trading, it does not give an indication of when that might happen. Finally, while DEX has added 2 new tokens recently, it does not provide any information about the performance of those tokens either. Two members of the U.S. Senate Banking Committee expressed their concerns during a hearing. They were worried about the crypto space still not being regulated, investors losing billions of USD recently, and the SEC's attempts to take control of the crypto space through hostile approaches. They called for Congress to step in and create a regulatory basis for the crypto industry. Based on the investment criteria discussed in this article, I would rate it a 5. The article discusses the concerns of 2 members of the U.S. Senate Banking Committee regarding the lack of regulation in the crypto space and the potential risks to investors. However, there is little discussion of potential investment opportunities or strategies, and the focus is more on the regulatory environment and potential risks. Bitcoin is currently in a pivotal area, and the next couple of days could decide whether its price heads to either $28,000 or $19,000. US dollar strength, bond yields, and stock market performance could all cause Bitcoin to trend downwards. Chinese bond yield movements could also push the currency higher. I would rate this article an 8 out of 10. The article provides a thorough analysis of the current market conditions and provides a clear overview of the potential direction of the market. Additionally, the article also references key indicators such as the US dollar strength, bond yields, and stock market performance, which is useful for investors to consider when making their decisions. Karim Nurani is an influential figure in the technology sector, with a focus on blockchain, cryptocurrency, and virtual spaces. He is an advocate and early adopter of these technologies. These technologies emerged in the early 2000s and have since grown to become integral to the financial industry. His experiences suggest that while blockchain and cryptocurrency offer a way to shift power away from established institutions, they also carry risks. This prompts the question of how society and technology should interact. Interoperability between banks, humans and devices is key to achieving mass adoption, but could also be limited by the need for oversight. Ultimately, technology has the potential to empower people to do things they wouldn't be able to do otherwise. I would rate this article a 8 out of 10. Karim Nurani provides an interesting and informative overview of the shift in technology towards blockchain and cryptocurrency and the implications of this technology. He also provides a balanced perspective on the need for oversight and regulation. The article is well researched and provides a comprehensive overview of the current state of the market. The European Central Bank has advised banks in the EU to begin applying caps on Bitcoin holdings, ahead of global norms set by the Basel Committee on Banking Supervision. The BCBS has proposed the highest possible risk weight of 1,250% be assigned to unbacked digital assets such as Bitcoin. This would mean banks would have to issue capital equal to their holdings, and be limited to holding crypto in amounts not exceeding 1% of their core capital. A survey by the ECB revealed that distributed ledger technology is barely used across banks. It also revealed that crypto activities and exposures are insignificant. I would rate this article as a 7 out of 10. It provides a good overview of the current situation with regards to the Basel Committee on Banking Supervision's proposed regulations for banks to limit their holdings of Bitcoin, as well as the potential for Europe to enact similar rules. The article also outlines the ECB's survey results on the use of distributed ledger technology and crypto activities and exposures. However, it does not provide enough information on the potential financial implications of the proposed regulations. Crypto YouTuber Ran Nooner believes that if the SEC attacks USD-backed stablecoins, $100 billion in investments will be forced to relocate, possibly to Bitcoin and Ethereum, causing prices of the cryptocurrencies to skyrocket. This follows the Paxos-BUSD news. The SEC ordered Paxos to stop minting new BUSD tokens and issued a Wells notice to BUSD as an unregistered security. With more aggressive attitudes being adopted by regulators, multi-billionaire venture capitalist Tim Draper predicts Bitcoin will be worth $250,000 by mid-2023. He also predicts that investors will move to quality and decentralized cryptocurrencies like Bitcoin. I would rate this article a 7 out of 10. While it references potential inflows of $100 billion and provides a bullish outlook on crypto assets, it does not provide any further detail on time frames or specific investment criteria. The article also mentions Tim Draper's bullish predictions for Bitcoin, but does not provide any further detail on when these predictions may come to fruition. The U.S. Securities and Exchange Commission has included the regulation of emerging technologies and crypto assets in its 2023 priorities. This was prompted by the volatility of the crypto market in 2022 and the need for investors to feel more secure when trading crypto. Regulations may provide answers to questions such as whether crypto offerings are securities. What information crypto companies must provide investors is also answered. Since November 2021, crypto exchanges have had to provide investors and the IRS with 1,099 forms. Crypto is considered property, subject to capital gains taxes. The SEC uses the Howey test to determine whether something is an investment contract and, therefore, a security. This is currently being debated in the court case against Ripple Labs Incorporated. The SEC has also issued warnings to crypto companies, such as Paxos and Kraken. They are offering services that could be deemed as an unregistered security. We can expect to see further regulations in the crypto space as the Ripple case is expected to be ruled on in the first half of 2021. 810. This article provides a comprehensive overview of the regulatory environment surrounding cryptocurrencies and the SEC's current plans for the industry. It provides useful information on the legal aspects of investing in crypto and the potential implications of the Ripple case. However, it does not provide any specific advice on how to invest in crypto or what strategies investors should use. It also fails to provide any timeframes for when these regulations may come into effect.